Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, June the 14th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together in this morning leap session to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday our main hypothesis was a open auction outside a range or just inside a range but outside of value, a rotation up to test the upper distribution, or the upper part of the lower distribution in the LVN here at our key line in the sand at 85.50 and find responsive sellers, initiative sellers, and rotate down through into that 73 area, and if we didn't hold 73, down to the mid of the gap, which was at 79.50, and our key line in the sand down at 69.75. We popped up slightly more. We got, Hypo 2 was a open auction just out of range or just in range, and then a move up, chop around the LVN between the double distribution day on Friday, and then a move up into the upper distribution and a test to the upper side of the value, which was up in the 2092 area, I believe. What was the value area? Value area high was 93. It looked like we were going to get Hypo 2 in play, but they just, after they came up and tagged that VPOC and tested the, the 89.75 area, which was the open of Friday, they just rotated it down, got back and just battled the range low at 79.50 pretty much all afternoon, and then finally gave up and came down and hit the targets below. Unfortunately, I got some of it in the morning, but then I had connectivity problems. I had, it was quite the Monday. I had my wife away, and then I had bad allergy attack, and then my my trading computer lost connectivity, and I thought I had a virus. Anyway, I'm fixed, but it was the nice thing I said about yesterday is when you have a double distribution day with the structure behind it that we had, it would be a good trading day. And basically, you wanted to be long above the 85.50, and you wanted to be short below it. And that was basically the trades. There was a couple beautiful trades. This midpoint, I took this midpoint trade right here to the long side. And the other really nice trade was this first midpoint trade. That's the trade you should have been in the rest of the day for the target down at the midpoint at the 69.70 area. Anyway, so mainly Hypo 1 played out again as anticipated with a little poke through and a little test of Hypo 2, but basically we failed on the second test into the upper distribution from Friday. All right, so I'm bringing this chart back in because I want you guys to understand how it fits. Right now, we're trading inside of this zipper right here. And the microcomposite VPOC of this zipper, and I'll show it to you, so I have it on another chart here. You can see that this black microcomposite VPOC of the zipper is down at 34.75, while the other zipper on the other side of the W pattern, the first microcomposite is, write these down on your in your journal, 55, 75, and then 42. 42 being the most important one, and then the 34, 75. I'm using 35 because if we look at the structure of this W pattern, where's my picture? Oh, okay. Now that we're back in the zipper here and back in the that distribution zone with all the undetermined fair value, as long as we hold inside the zipper, we're still coming down to find buyers, and those buyers are going to show up somewhere between 55 and the 35 area as long as we're down here. And if we can't hold the low of the zipper at 24, then we got to be looking at the midpoint of this zipper down here, and that's all the way down in the 1950 area. So we're at an important area that we need to hold before we see a bigger continuation down, or we could see a bigger continuation down. We've just put in our fourth neutral day in a row. We've had one. This was a neutral day. Was this a neutral day? No, this was not a neutral day. So we had 1, 2, 3, 4. We've had 4 neutral days in a row. That I've only seen happen once before. You don't see that very often. Combined with 2 other things, that the daily ATR continues to compress. Our 20-day ATR is now down to 20 overall. And the VIX is at the 4-month high so far. We're seeing compression and volatility starting to creep in as we move towards that Brexit vote and all the economic news that we've got this week, as well as the quad witching approaches this Friday. So really interesting. But let's just step back. Let's just go through our normal routine. Let's take a look at the news. News gave us a 3.5, 4-point pop, and then we came right back down. And it was on better economic retail sales, and we matched core retail sales month over month. Import prices came out at 1.4, expected 0.8. So I mean, we had good news, and we only popped 3.5, 4 points, and then we came right back to where we basically started. We've got business inventories coming in at 10 o'clock, and that's basically the rest of the news for the day in terms of scheduled news. Going to just to take a look at the trends on the different time frames. We're still holding above the 9 and the 20 on the monthly. We are seeing a move. We are below the month open. The month open is 2085, so we're below the month open, and the week open is at 2081, and we're below that as well. So we have a bearish month and a bearish week so far going on, but we still have not come back to the 2 moving averages. That'll take us back here to test these down into the 2040 area, which is the key area below us in this distribution zone. Going to the weekly, you can see we've come back and we've closed this technical gap. We've lost some slope and separation, not much, but we are challenging the 9. We are below it right now. 67.50 is the 9 EMA. We're trading just below it. A move down to the 20 SMA doesn't take us takes us all the way down to the 2024 area. So we're not quite there yet, but we are seeing a possible challenge to the upward trend on the weekly. Not terrible yet. But if you move down to the daily, you can see that we have broken below the 9 and the 20. We haven't started the downward trend because we don't have the 9 crossing over the 20 yet, but we're coming down, and this naked cross right here on the daily is got to be your extended target today down here. And it's really not that extended, but I marked 2048 in your journal. If we do not get above the 74, that could be the extended target today down at 2048. It's still beyond our daily ATR, so we could get a trend day down, but that is the target. As long as we're below the 2074 and below the 9 and the 20, this naked cross down here is a major target for us at 2048. Okay, going to the intraday, you can see everything's going to be trending to the downside. Very strong trend, good slope and separation. Prices paralleling the 9 quite nicely. The 1 hour, same thing. We had this consolidation period and tried to challenge a trend in the RTH session yesterday and failed miserably. Then we get the continuation late in the afternoon and overnight. Going to the 30-minute, you see same thing, slope and separation. This is the first challenge of the downward trend down here, we're coming up to test the 20. That'll bring us up to the 2066 level. That's where we pop to on news. And then going further down to the 15-minute, you can see we've got consolidation and possibly, trying to find some support here and a rotation back up. But we are above the 9 and the 20, so we've violated the downward trend and starting a possible upward trend. And then on the 5-minute, same thing, basically consolidation, but challenging the downward trend and trying to start an upward trend. We've got a naked cross at 2064 on the 5-minute, and we've got one at 2064 on the 15-minute. So those are immediate targets below us. If you see some weakness coming in, to take out those two. Is there one on the 30-minute too? The one on the 30-minute is above us at 2068. All right, so let's take a look at the structure. Well, here we are, and if I bring in now, expand this, because we're coming back into here. I've expanded this longer time frame microcomposite from March the 17th throughout. It does not change the microcomposite VPOC. It's still at 2042.25. Value area comes up to 2072.50. We're below it right now. Remember how I said that if we got below that 69.75, you'd have a really nice short into the 66 area. Well, it didn't happen until Globex, but it did happen, and you got a really nice trade in the Globex. I took it last night into that 66. You actually took it even lower. But here we are trading 64. So we have the gap above us. That was our target at 66.50 because it's still an RTH target, not a Globex target. And then we have now a gap at the close of yesterday, which was 69.50, just one tick below that key line in the sand at 69.75. And then basically our value area on the microcomposite lines up now with the CLVN. So CLVN at 73 now becomes our key line in the sand above us. One thing I want to point out is we now have a 3-day island top. Okay, we've got a gap here and we've got a gap here. This is a 3-day island top, so you have to pay attention to those things because this is a reversal pattern, and we've now gapped down and gotten back inside of this distribution zone. Do I think that the wheels are falling off and we're going into a bull market? No. What I believe is that we couldn't find the buyers to continue higher above the 2110. We completed the rule of 10, but we couldn't go any higher. So what are they doing? They're coming down to find buyers. We left a lot of repair work down here in this undetermined fair value. You can see how blunt this area is right here on the composite. This should be much more pronounced in these areas to show where determined fair value is, and we don't have it in this area. So as we come below the 73, get back into the value area, now we're back into this distribution zone where we've been just chopping. And our first target below is that 61. It's actually 62 and a quarter, but we've already put that in overnight. Our overnight low is 60 and a quarter. So we're coming down near the overnight low. 61 is the first target. And then we have that 54. And then we have the 48. I'm going to be using 49. But the key level below us is this 42 to 40 area. This is, the most traded price going back to the beginning of 2013. It's the most traded price going back to March the 13th. It is the most traded price within this distribution zone, even though it's closely surrounded by the 250 and the 32. And then we've got the 35 below. So these are all areas that, we get into this area, it's going to be choppy down here again. So right now, we've got to be looking at the fact that we're going to be open auction outer range again. I mean, if you've noticed, we've, in the last week, we've opened auction just outer range or just inside a range, but outside of value each time. And the VPOCs keep migrating lower. So values coming down as they're searching and advertising to the buyers. So we're going to be opening outside a range, outside of value, and in a very important distribution zone inside this longer time frame microcomposite from 72 down to the 2016. And look at how interesting that is, because if we bring the longer term in, remember that in the July or in the June contract, that 2016 was our microcomposite LVN, this one right here, which is now shifted with the contract change down to it's been adjusted down to 2007, but that 16 is still going to play an important key role in our thought process, because it is now the value area low of the midterm microcomposite VPOC. So let's take a look at let's just take a look at above. We've taken a look at below. If we get back above 73, your first target above is going to be that 7650, and then the main target above is going to be the 2080.75, really between 79 and 20. This gap will still remain open until we test it from below on the other side. So we have to come up to the 73.75 to test that gap from below, and close it, and that will close the gap out. Okay, so taking a look at the overnight, we have an overnight high of 71.75. We have an overnight low of 60 and a quarter. We have a VPOC which could shift down, but right now it is at 64.50. An LVN at 65. Really, that's not going to be tradable for me. We are in at 67. Really, it's going to be, the range low at 68.75. There's one at 62, but again, nothing strong enough to use. All right, so that's basically all the information I can get from overnight. Overnight inventory is net short. Extend this out so we can see this. So our key trade level today is going to be the 68.25, and then it's going to be all about the 73. And just above 73, we've got the 75, but I'm going to be using the 73. It's too important of a level not to pay attention to, and it's going to be above our overnight high. So all right, now our daily ATRs off of the bottom of the Globex at 20.60 1/4. 20-day ATR takes our daily ATR upside target up to 20.80 1/4, takes our downside target down to 51.75. So we still have range to come down further in this distribution zone. Let's do the upside numbers first. Above the 73, I'm targeting the value area low from yesterday at 76. And then above 76, it's all about the 79 area and coming back up to the upside of that gap, and the midpoint, the VWAP, the IB low from yesterday, and the naked VPOC, and the 20-day daily upside ATR. A lot of business up here. So if we get above 76, you want to be long into this, because this is going to act as a strong magnet. And then, and again, not to forget that we also have the microcomposite VPOC, two of them at 79 and 81, with the prominent one being 81 1/4, I should say. So above 71, we've got another target up here at 81 1/4. And then there's really not much until we get up into the 85.75, that 85.50 again. Here's an LVN here at 82. What was the midpoint of, oops, what was the midpoint of, so it was a little bit lower at 81. And we have, yeah, you got a little bit of an LVN right here, but I don't think it's going to act as much strength. There's not much around there in the 80, 82. So I'm going to just leave that open and go right up into the LVN, the 84.75 to 85.50. Incorporate that area, and then above that you've got the value area high at 87. But really, if we get up there, I think they're going to push to that 89 anyway. So I'm going to bring this down to incorporate the 89 and the 89 1/4 range high. Need two of them there. And then above that, 94, 95, 97, 21, all the same numbers that we've been looking at above. I don't think we're going to see that today, so I'm not worrying about them too much. So below us, we've got this zone right here. Basically, that it's going to be really tough to trade in here. You've got, naked VPOC, you've got the microcomposite VPOC, you've got the CHVN, you've got the naked close, you've got the overnight low. There's a lot of stuff here, and we really don't have anything solid to lean against, really, until we get down into this 56 area. And I'm just trying to see if there's something smaller we can, more in line with what we can lean against there. There's 60.75. You know what? You can use this overnight low. I'm going to use 50. I'm going to use 58.75. It's really 59. Come on. Let me move this. What is going on? Something's wrong with my chart. I can't move that. Won't let me click on it. All right. Hopefully that. Just try this. It's clicking on something right on that level, so I can't move it, but it's 59. And then below that, we've got 54.50. With a target at 55.75. And then below 54, we've got the 51 and our daily ATR target. I'm going to front run it at 52.50. And then we've got the 49, and then anything below 49, I'm really looking for a push down into this 42 area and 41. But we should also have, there's the 49, 49.75. So I'm going to move that up to 49.75, and then it's not much there. There's this gap here. There's really not much there, so I want to stay short, below the 49 for a bigger push down. Let's see if there's anything on the flex levels in that 46 area. So much going on, so many levels right now. Oh, we've got that gap zone. Yeah, at 45.50. That's my target. So, and it starts at 47, so we should put a trade at 47. And then the target at 45.50. All right, and then a move down into the 40s and all this stuff down here, and there's lots of stuff down here between the 40s and the 30s. So give us a couple levels down here. I know I'm running late here. So really, next key level comes in at 34.75. 32.75. Just starting to bring the lower levels down here. 31.25. And then 27. And that should take it. Now our weekly ATR is running at our 20-period weekly ATR is running at 52.087. So our downside weekly ATR target's all the way down here at 37, just below the year open at 37.75. So let's talk about hypotheses. We have an open auction out of range. So my main hypothesis is continuation down into this distribution zone below. So two things. My main hypothesis is either an open drive or an open auction out of range. The open drive will move straight down to take out the overnight low, chop around in the 60 to 58 area, and then get a continuation wave down into the lower levels. But really, I don't think we're going to see an open drive because we've been seeing a lot of open auction out of range. So I'm looking at an open auction out of range, a rotation up take out the naked close at 66.50, come up and test the range low, either reject the range low or come in here and fail somewhere between the range low at 68.75 and the key line in the sand at 73. Find initiative sellers, step in, and then rotate us down through, take out the overnight low and come down into this 55 to 51 area, maybe even a late day probe down into 42. But I'm expecting a move up to find sellers, find the sellers, and rotate us down through and come back down into this upper part of the distribution. And you want to be using the 24th as a guide in terms of a profile day, and I'll pull up it and I'll put a chart of that particular day. This was a trend day, and I'll put a chart on it so you can use the levels off of that to guide you during the intraday. So Hypo 1, open auction out of range or open drive, but mainly I think it's going to be an open auction out of range. Move up, find responsive sellers between the 68, 75, and 73 area, rotate down through, chop around the 60, 61 area, and then get a continuation wave down towards the 50s, maybe even a poke down into the 40s. That's Hypo 1. Hypo 2 is an open auction out of range, a push down into the 62 to 61 level, chop around there, and then find buyers and slowly work our way up towards filling the gap and getting up into chopping around in the lower distribution with a late day probe up to test the 73, maybe even the 76. If we get above the 76, it'll pop up into the 80. So Hypo 2 is open auction, out of range, move down into the 61 to 58 area, chop around, and then slowly work our way back up into yesterday's lower range and testing the value area low from yesterday, maybe a probe into the middle of the up into the VPOC. That's Hypo 2. Hypo 3 is kind of similar, but we open auction out of range, maybe take out the overnight low, but come up into the lower distribution, chop around in here, and then come up and get stuck inside of these wicks right here. The 2-day microcomposite VPOC, let me just take this off. The 2-day microcomposite VPOC is here at the 81.25. It also happens to be the most traded price of this whole distribution zone when I put a profile on the whole thing. So you can see that that coincides with the most traded price in the last 2 days. So there is a possibility that we rotate up, get up here, and then just chop around and repair the auction in between this 88 and 79 area. So Hypo 3 is a move up into that area and just basically chopping around in this value area from the prior day. Hypo 4 is a open drive, a move down immediately to the 60 area, maybe even the 55 area, chop around in this area, and then get the continuation wave and a push down into the 42 and get ourselves a continuation gap and go day down towards the most traded price down here. I know I went long, so I'm going to skip the gold. Gold just continues to get stronger, getting closer and closer to the 1300s. I don't know how I went so long. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.